The euro to US dollar pair is currently trading below 1.0600, influenced by safe haven flows amid escalating tensions in the Russia-Ukraine conflict. The recent deployment of US-supplied ATACMS missiles by Ukraine to strike Russian territory has significantly escalated the conflict. In response, Russian President Vladimir Putin has broadened Russia's nuclear policy to include the possibility of nuclear retaliation in response to significant conventional assaults. The euro has weakened to an over one-year low of $1.0496, driven by concerns over potential U.S. trade tariffs' impact on eurozone growth. Additionally, the U.S. dollar has appreciated due to investors' expectations of pro-inflationary policies from the incoming Trump administration. These policies could drive up inflation, potentially prompting the Federal Reserve to slow the pace of rate cuts. European Central Bank (ECB) President Christine Lagarde is scheduled to deliver the opening remarks at the ECB's Conference on Financial Stability and Macroprudential Policy in Frankfurt. The ECB faces a challenging situation as European inflation remains more persistent than initially anticipated by policymakers, while the broader European economy continues to show signs of imbalance. Euro bullish themes. Eurozone inflation is a persistent challenge. Eurozone almost eliminated its trade deficit in May. Slower pace of rate cuts from the ECB relative to the Fed in 2024. ECB conveys tough message against inflation. Continued Eurozone growth over time and much slower pace of rate cuts from the ECB relative to the Fed. Policy rates are unlikely to have peaked at 3%. Further ECB tightening supporting outlook for medium-term strength. ECB will likely stay on the path possibly for a while longer. ECB may have another 150 bps of rates hikes to go to get to a terminal rate of 4%. Growth and monetary policy trends to support euro. Declining inflation in the US, reopening of China, and cheaper gas prices to avoid a significant economic slowdown. The rate hikes will continue and that's positive for the euro. An improving outlook for the Eurozone economy and currency. Euro bearish themes. European underperformance relative to the US should weigh on the shared currency. Likely end to ECB rate hikes and underwhelming Eurozone economy. Both interest rate and economic growth differentials seem to favor the US over Europe. Russia is going to get rid of the euros in their wealth fund. European Commission expects the Eurozone economy to decline in Q4 2022 and Q1 2023. Italy's debt could be a worry for the Eurozone. Inflation risks are to the upside, while growth risks are on the downside. ECB is moving from fighting inflation to worrying about inflation. Europe is in a great stress. Bracing for a tough winter. Underwhelming Eurozone growth should see ECB lag well behind the Fed. Europe is the biggest loser in the Russian-Ukrainian war. Recession seems likely in Germany. In other way. USD bullish themes. Anticipated slowdown of the US economy. The hurdle for raising rates this month is higher, implying fresh US dollar falls. Dollar weakness will pick up pace during 2024 as market attention turns toward Fed rate cuts. Fed feels more comfortable with receding inflation. US dollar's position as the primary global reserve currency is being challenged. America on verge of losing petrodollar privilege. Other regions may need to continue their crusade for inflation, reducing spreads of debt securities yields. Combination of lower Fed rate expectations and improved risk sentiment is quintessentially negative. No more Fed hikes, potentially lethal to the US dollar. US economy to slip into recession. Fed eventually cut rates quicker than peer institutions. USD bearish themes. Monetary policy dynamics should favor dollar strength into the early part of next year. Softer growth outlook that will drive safe haven flows towards the dollar. Several factors support dollar strength. Reasonably steady US economic trends and hawkish leaning Fed. Significant upgrades too for the next periods are set to keep US dollar gains sustained. Markets featuring companies at the forefront of AI services could reinforce currency appreciation pressures. Slowdown in US inflation and growth is going to take a lot longer. When the dust settles, the Fed is set to continue raising rates. US to have permanently higher rates than elsewhere. Re-acceleration of inflation and its win over the Fed will continue to catch the market by surprise.